In Investing 101 today, Fritz Golman steps in with an outlook on the stock market and more.
Joining us on Investing 101 today is Peter Hanks, who's an analyst with Daily FX. Thanks for coming in.
Thanks for having me.
So Peter, from your analyst position, what do you think, looking forward into the end of the year, the market looks like?
Well, I'm cautiously optimistic. I think it's hard to argue against all-time highs that we're currently around, but there are obviously a ton of themes to really keep in the back of your mind. Trade wars, most notably.
So given that, and given all the variables that are out there in a kind of an open time period, give me some investment strategies that maybe are defensive.
So I think with the current state of monetary policy, it's really important to really know how much exposure you're taking on. Everyone's grasping for yields, so with interest rates so low, you're taking on the same amount of risk in the past, but you're getting a lot less return for that same risk. So it's important to have negative correlations in your strategy. So if you're long stocks, be sure to have some safe havens in there, like maybe the US dollar or gold.
I was going to say cash obviously is king, and
cash is king, yeah.
So thinking about perhaps certain sectors defensively as we square up our year-end portfolios, what would those be? I mean, in particular that investors might want to take a look at.
I think tech is definitely the main one to watch. It's been really the leader of this bull run, and it's starting to show a little bit of aging, and now we're getting some regulatory concerns in there as well with antitrust concerns.
Now, would that be all tech, or are we talking about specific like FANG stocks, or are we talking about maybe some niche players?
Already you have people like Jim Cramer, who originally coined the term, asking for Netflix to be dropped out of there just because they've been lagging a little bit. So I'd argue FANG is really the one to watch. I mean, those are the biggest names, the largest market caps. So they have the most influence on the indices and things like that.
Obviously, on top of everything, the overriding concern that I would say every investor and probably even just bystanders have, are we headed to a recession?
That's really the hot question. I mean, a few months ago, we had that yield curve inversion, a few curves actually, and that really sparked those fears. Since then, we've kind of backtracked a little bit and everything's been smooth sailing. We're at all-time highs now, but we still have so many of those concerns. I mean, trade wars, monetary policy, the direction that's going to continue to go in. So for the time being, the next 6 months, I would say no recession, but as that time frame goes on, the bull market ages even more, then the chances only increase.
Any specific, give me just some really specific investment strategies.
Really just to know how much exposure you're taking on, especially since we're talking about recessions and things like that. Recessions often accompanied with drastic stock drops and drastic moves. So if you're not keenly aware of your risk and your risk profile, that could really come back to bite you in a big way, and you don't want that.
Of course. Peter, thanks for joining us today.
Thank you.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.